Well, good afternoon, everybody. I think the theme for me of the conference so far over the last day and a half is very much around confidence and communication. Hopefully we can carry that theme through. We've talked very much around the concerns of customers, and my presentation here is based upon customers, because without customers we don't have a business. I've been in the EV space for the last 7 or 8 years. I've worked for OEMs for 35 years, I have to admit. But I got into the EV space around about 7 or 8 years ago with Polestar. I set up Polestar here in the UK as managing director. Wanted to really get involved both in terms of the disruption of the industry in terms of EVs, but the second area is actually from a customer perspective to get involved in a new business model, direct to consumer, where we put the customer at the center of, if you like, the customer journey. I spent time there. I then went to Genesis here in the UK as managing director. Again, and part of that was very much taking what I'd learned at Polestar, putting it into a really customer-centric brand, which was premium luxury. They decided to change their business model, so we'll talk about a little bit about that in terms of disruption, before joining VinFast here in the UK as Deputy CEO at the beginning of this year, again, as part of that EV journey as well. I'll talk a little bit, I'll give you a bit of an insight into that. Quick question, show of hands, just to make sure you're still awake. In terms of disruption, we often talk about the Chinese coming in. Who thinks that the Chinese are going to disrupt the market here in the UK? Show of hands. Okay. All right, it depends how long the race actually. You're absolutely correct. Okay. Before I give you the answer to that, I'm going to give you some insights into yes and no. Okay. What I'd like to just do is paraphrase what we've heard. If we want to get greater EV adoption from customers, we've heard a lot, and the last panel talked about it as well, is making charging accessible. The three key challenges for customers, or anxieties as we call them, is around range anxiety. And we know that battery technology is actually improving exponentially. So range is becoming less of an issue. We talk about a 1,000-kilometer battery coming. Okay, you have to pay a lot of money for it, but that is being taken care of. We talk very much around charging anxiety, and I'm not going to mention that any more than the panel have just done, in terms of where can I charge, when can I charge? And there's an education piece around it, as they eloquently said a few minutes ago. The third element of this is price anxiety. The fact of the matter is that customers buying EVs today have to pay around about 34% more for an EV than an ICE car. That is fundamentally one of the key stumbling blocks. Let's call it a stumbling block. And for those who put your hand up, who think that the Chinese are going to disrupt the market, actually, we're dependent to a large extent on them to disrupt the market because they have a price positioning which is lower than the traditional manufacturers, and I'll again show you that in a minute. So, what I'd like to do is just look at this. Are they disruptors disrupting the UK market? We might touch on a little bit of Europe if we've got time. The question is, disruptors. Who are they? What are they? Etc. Because disruption is not just about the manufacturers. I've put up here manufacturers such as MG. Well, MG are not now considered to be a disruptor. They've been in the market in the UK for around about 8 years. They were a legacy brand, of course. So they have awareness already in the marketplace. We talk here very much around Tesla, been in the market for 10 years, now considered to be part of the mainstream. So they're no longer a disruptor. When we talk about disruption, we talk very much around new entrant EVs and Chinese. And that's, okay, we talked very much, yesterday Matt Galvin from Polestar was here. I can talk about Genesis. But look at all the others that could potentially come here. Are they going to come? I'll explain in a few minutes why some of them may not. Some of them have already been and gone. Fisker have already, unfortunately, been and gone, and that's a tragedy. That's a tragedy for customers. Because people who bought a Fisker put the reliance in Fisker, and actually they've now left the market, and as a consequence of that, they're left with a car which has very little value. Of course, we've seen BYD enter, and they were supporting the Euros marketing, wise, etc. And for those who haven't heard, Gareth Southgate has now resigned, so that may please some of you, may not others. But there's a whole range. NIO, for example, was another one that was going to enter the UK market and now has decided not to. But we talk about disruption, also the business model. Sorry, I'm talking quickly now because I know that the time is passing. We talk about the business model. It's traditionally a dealer model. Actually, Polestar came in and Tesla came in with a direct-to-consumer model. You went online, you bought your car online, etc. Very little interaction. It was up to you what interaction you had. Very tech-driven, etc. What has happened, though, is that the new entrants who went that route, and that was based upon research that consultants provided, probably the back end of the last decade, the late noughties, okay, they did not take into account that 95% of customers want an omni-channel experience. It's the second largest purchase in anybody's life. They actually want both. They want to serve digitally when they want to, when it's in their, when they've got time to do it, but they then want the reassurance of going somewhere. We also talked about, and I think there was a group talking yesterday about subscription as well. Those are disruptive models as well. They have not, at this moment in time, gained a foothold in the UK market. So the answer to the question is no, the disruptors are not disrupting. The business model is not being disrupted. In fact, we are seeing that those businesses that went agency or went direct to consumer are now reverting back to either a non-genuine agency model or alternatively a dealer model. But this is my cop-out for you, not yet, okay? There is still a chance that they will disrupt, and there's a good chance they will disrupt. But there are some challenges ahead for them. What is very clear, though, is that at a very high level, the disruptors are causing a huge amount of disruption in the boardrooms of the traditional OEMs across the world. They are frightened. They are very, very frightened of it. And let's have a look, though, at this rapidly changing landscape. You can see here a number of topics down the left-hand side. If you look at the headlines, as I say, if you were the top or the board of a traditional OEM, you would actually be running scared, and you have been running scared. European car manufacturers risk being crushed by the Chinese. An influx of Chinese cars is terrifying the West, and the West has no real response for it. We've got the geopolitical debates going on. We've got tariffs. And we know what's happened now. When I put this presentation together a few weeks ago, obviously the picture wasn't clear on tariffs. Now the picture is clear on tariffs. But what we have got, unlike in China, in Europe, there's no one common thought from the manufacturers. They're not acting together. So people who talked about collaboration yesterday and today, actually, Europe doesn't collaborate effectively in this. We've also got, in terms of this model, we've actually, and this relates back to EV sales penetration and the distribution model, Great Wall has closed its European operation with 100 people because we're not getting the sales penetration of EVs, which we talked about yesterday as well. However, there is good news. Some EV startups are really appealing to the capital investment arena and getting significant amount of capital investment. The question is how long if there is no return on investment or a limited return on investment. And then the final point here is how can Europe benefit? If we said actually there are challenges, how can Europe benefit? Well, actually one of the biggest hurdles for governments is losing jobs. And actually when I put this together, the Turkish government was holding talks with BYD and Chery about investment actually in Turkey. They've signed an agreement now in I think it's 2026. A factory, a BYD factory will open in Turkey. We have to embrace the Chinese. We have to embrace EVs coming from afar. The way we do it, though, is by collaboration and not tariffs and not actually forcing them and putting barriers up. A couple of other points here, really, just to highlight. We talked about it yesterday, EV sales penetration targets, ZEV mandate, and then incentives. And you heard a few minutes ago about the impact and inconsistency around government policy in relation to this, which is causing huge issues for manufacturers and customers, which undermines their confidence in buying an EV. But fundamentally, why is Europe so attractive to the Chinese OEMs? So 4 points that come up in that, 5 points come up as one. But anyway, strategic investment in electric vehicles. What happened was, 10 years ago, the Chinese government got all the manufacturers together and said, we want to be an exporter of EVs. So that's what they set out to do. They have highly competitive home market. So the capacity in China for car production is 30 million. Today, they only sell 27.5 million. 2.5 million vehicles can be exported. Higher margins in Europe. The average margin for a car company in China is 0.1% return on sales. In Europe, it's 5.1, okay? I've mentioned about the capacity and production cost advantage. I will try and be quick and wrap up in 5. Let's have a look at that competitive advantage. Okay. They have high volume car production, I mentioned. Battery production, they are 77% of all batteries are produced in China. So that gives them economy of scale. Vertical integration in component supply. Okay. Really, really important when you've got tier 1 suppliers, etc. In China, BYD own 75% of the components. Therefore, they're not paying margins to other suppliers. Okay? Car design. Okay? What's happening in China? They're at the forefront now of car design. And they are now building electric vehicles up from, if you're the design. Whereas the rest of the world, we're still trying to put batteries into cars. So they have a competitive advantage. In summary, the cost of producing a car in China is significantly less than in Europe today. But it is being addressed. Where does this competitive advantage come from? Right, what this is meant to show you is that just an example of BYD on a seal, it's in dollars, etc., but they have a 25% price advantage in production costs. How does that translate? When it comes down to EBIT, for those who are accountant-driven, they can even, you can see there that they have a price advantage, an EBITDA advantage over the Tesla Model 3 and the VW. Even though the Tesla built in China, they still have a good return. So that's the competitive advantage that they have. They can bring to the consumer benefit here in Europe and the UK. And Europe, and the rest of the world as well, of course. Now, having a competitive price is one thing. Having a sustainable business is another. And I'm sorry you can't read this, but I wanted to just show you this as an illustration. Effectively, from 2020 right through to today, on a quarterly basis, are the manufacturers out there making money? What this shows you is the traditional car manufacturers are. So they have a solid platform in which to invest in EV technology and driving down the costs of production. Most of the ones in red, and certainly you can see them on the left, highlighted in green, are the new entrants. That means that they're not making money. And the big question is whether or not those can survive in the future. Not saying they will, or not saying they won't, but that's a real challenge for the industry as a whole, for the manufacturing sector, as it were, the OEM sector. Now, a thought for you here is that we often talk about price, and we said yesterday, price has to come down. It has to become more affordable, and that is true. However, buying a car for a consumer is much more than just price alone. There are other factors that happen in sort of the buying, the customer's buying decision, as it were. And OEMs have invested millions of pounds over the years, or tens of millions of pounds over the years, building brands. And so we must not underestimate the fact that the new brands have to have a USP, over and above price, I might add, because ultimately customers have a choice. It is a complex purchasing decision for customers, buying decision. It's not just based on list price, it's based on monthly payment. It's OEMs manage residual values. In China, I haven't got enough time to tell you, but in China, they don't worry about residual values. They don't worry about used car prices. In Europe, that's fundamental to getting a monthly payment that's competitive. It's also about after sales. It's also about parts availability. It's also about talking to someone this morning. It's also about insurance, getting insurance for your vehicle. And we know that some of the new entrants have had difficulty in that area. And it's all about having a repairer network. So buying a car, irrespective of whether it's EV or not, even more complicated with an EV, quite frankly, it is a big decision. And I say brand and people's perception of the brand will drive their behavior and their buying habits. Okay, in summary, new entrants from China are arriving and will, okay? However, let me just briefly give you a statistic. There are 150 brands in China. 10 of them, only 10, have over 50% of the market share. Okay, so that means there's a lot of new brands out in China. They will not come. They will not be able to come because they've not got the financial strength to enter the market. So it's, to be very clear. But the big players will, and they're already starting to come. It will be easier for them to enter the European market than the UK. So that's one of the challenges we have. We're a right-hand drive market. Beyond the most significant, and I've just named some of them, it'd be difficult for them to come. Will they gain market share? Yes. How much will depend upon how well they market themselves and how much they invest in marketing to create a brand that becomes desirable over and above price. Because Daewoo tried that many years ago, for those who are a little bit mature in the audience, and they're no longer, they weren't around long. Their proposition was price and price really alone. But do not underestimate geopolitical factors which will influence the power of the legacy OEMs to compete, and they are starting now to compete. They're driving down the price of their EVs. They're discounting them heavily, which is not a good thing, but another story for another time. The cost of market entry for new entrants are sky high, which will limit their ability to come in. They don't have a customer database, and I know that too well. And the cost of building a brand are generally enormous here in the UK because of the legacy players. Brand equity is what customers are looking for when they buy a brand, not just price. Ultimately, it's about satisfying customers' wants and needs. So, conclusion. Are the disruptors disrupting the UK car market? No. Cop out? Not yet. Evolution? Not revolution. It will happen, and some pundits are forecasting 20% of the market will go to the new Chinese entrants by 2030. The jury's out. We will see. Lots of predictions are inaccurate. This one may not be. Let's see. Thank you for your attention. Hope you found it interesting. And I'll hand back to Davina.